Thank you for watching NTD Business. Coming up, the Federal Reserve raising interest rates again to curb inflation. It's the smallest hike since March. And along with the rate hike today, Fed Chair Jerome Powell maintains a tough tone in his speech. But how are the markets interpreting it? We talked to an analyst. More than 1,000 people have pleaded guilty or been convicted of COVID relief fraud. Lawmakers trying to find out where billions of taxpayer dollars went and what could have been done to avoid this. Farmers visit Capitol Hill to warn about a potential corn catastrophe. Many could go out of business if Mexico bans all genetically modified corn imports from America. That and much more coming up on NTD Business. Great to have you with us. Don Ma here. The Federal Reserve announced a quarter-point interest rate hike earlier today. The Fed is slowing pace of its increases, and this is a clear sign that the central bank is seeing progress in its fight. Fed officials acknowledge that, quote, inflation has eased somewhat, though the central bank is not declaring victory just yet.
The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
In his post-meeting press conference, Fed Chair Jerome Powell said the job is not fully done and that the committee anticipates ongoing increases. Again, Powell reiterated the Fed's commitment to returning inflation to 2%. He says the committee wants to maximize employment while doing this. But when asked by a reporter where he sees unemployment rate going, Powell did not answer directly. Now joining me to talk about the Fed's rate hike today is Joseph Trevisani, senior economist at FX Street. So the Fed raising rates today by 25 basis points, what we expected.
Yes.
What do you think about the language used here, though, in this?
Well, the language in both the statement and Mr. Powell's press conference has not convinced the markets that their view that the Fed is very close to the end of its rate hikes is inaccurate. About halfway through Mr. Powell's press conference, Treasury rates were down considerably. The 10-year was down about 10 points, a little bit more from where it was when he started, and the 2-year was down a similar amount. In addition, equities also recovered almost all of their losses. The Dow had been down about 300 plus points before, and it recovered to flat. So Mr. Powell said several times the job is not done. It's premature to think that it is. Nonetheless, markets are not convinced. They think the Fed is about finished.
So what's your position on what actually went into this decision of 25 basis points?
Well, the Fed they did four rate increases of 75 basis points each, which is unheard of. It has happened before, but it hasn't happened in many, many years, in really since Paul Volcker. So when they start changing that prescription, when they drop the next rate increase to half and then to a quarter, that is really what matters. That is really what is giving the markets their cues.
So you say that what matters most is really the action of 25 basis points.
Yes.
So is there a disconnect between what Powell is saying and what markets believe?
I don't think there's a disconnect because what Mr. Powell, I think, is trying to do, which is what the Fed always does, is to prevent any kind of rush, any kind of precipitous move based on a pending, or at least what the market thinks is a pending change in policy. So I don't think there's really a disconnect. The Fed has done this kind of rhetorical operation many, many times, but the markets, again, tend to pay attention to facts rather than rhetoric when they think the facts and the rhetoric don't entirely jibe.
So then we're talking about rhetoric. Let me ask you, when Powell said more work is needed and maintaining a restrictive stance for some time, how do you interpret that?
Well, you can interpret that a number of different ways. More work is needed. Does that mean we're going to get another series of 4 or 5 75-point rate increases? No, I don't think so. When he says more work is needed, you can think of that as a different way. That what's needed is there is more time needed for the rate increases that we've seen so far to have an effect, to have a cumulative effect on the market. That, I think, is how the markets are interpreting it.
And what do you think how Powell is looking at, there are signs of consumer demand weakening. What do you think Powell thinks of that?
Absolutely. As we all know, we've all heard many, many times, the U.S. economy is, 70% fueled by consumption, by consumer spending. And we've had two negative months in retail sales. Before that, we had a flat month. If the consumer starts to pull back, and this continues, that is the quickest road, the quickest path for the American economy to a recession.
And at the same time, it doesn't help, right, when the consumer inflation expectations are on the rise.
That's correct. Consumers will relate to what they're seeing in the markets, what they're paying. And although overall inflation has come off, some of the things at least that consumers have to deal with every day, primarily food, which has more emotional impact than most other increases, still are quite high. So consumers are expecting more inflation, even if it's actually waning, although it's not waning in food. And the Fed can see this as well. So all of these factors, I think, are one of the reasons the Fed is going to keep their rhetorical guns trained on inflation, even as their rate increases are diminishing and tailing off.
Fascinating. Maybe just one last thing. How many more rate hikes do you expect?
I think we'll have one or two more rate hikes, and that's it, up 25% each, and that's it. I don't think the Fed will continue at all past the mid-year. The other reason is in June, we will start looking towards 2024. And as we all know, 2024 is a presidential election year. I don't think the Fed wants to get involved with potentially being blamed for creating a recession heading into 2024.
I see. All right, Joseph Trevisani, FX Street, thank you very much.
Thank you very much for having me. Have a good day.
The S&P 500 and the NASDAQ closed sharply higher today after the first Fed date this year. Major indexes had lost ground immediately after the Fed rate hike, but gained back ground after Chair Powell started speaking to reporters, where he said he could acknowledge for the first time that disinflation had started to happen. The Dow added 7 points, S&P gained 43 points, or 1%. The NASDAQ rose 232 points, or 2%. More than 1,000 people have pleaded guilty or been convicted on federal charges of defrauding various COVID relief programs. This is according to a congressional hearing focused on COVID relief fraud today. Here's Republican Congressman James Comer talking about the scale of the fraud. He is the chairman of House Committee on Oversight and Accountability.
We've seen reports that between $76 to more than $100 billion in Paycheck Protection Program and economic injury and disaster loan programs were lost to improper payments. We've seen reports that $266 billion in improper payments were made by Medicaid during the pandemic. We owe it to the American people to get to the bottom of the greatest theft of American taxpayer dollars in history. We must identify where this money went, how much ended up in the hands of fraudsters or ineligible participants, and what should be done to ensure that it never happens again.